Hello everybody, welcome back to another valuation investing video, and today in this video I'm be going over Lululemon stock because last video I had some good engagement, and also they have their earnings report just in about a week coming around the corner. So with that being said, I'm be going over Lululemon stock, talking about their upcoming earnings on September 4th and deciding if we should be buying this stock today using my intrinsic value calculator that I've created. So with that being said, taking a look at Lululemon stock, we can see year to date it's down over 45%. Right now it's at about $202 per share, and just at the beginning of the year it was trading near $400 to $500 per share. So this stock has really had a bad 2025 and has really underperformed the market. Also, looking at the market cap right now is trading at nearly $25 billion, so it is a lot lower than what it was previously. So just keep in mind the market cap is how much you'd be paying for the entire company, so it is worth $25 billion. And if you didn't know what Lululemon is a global company specializing in technical athletic apparel and accessories. So basically they have competitors like Nike, so they're in the athletic leisure brand area, so Lululemon is in that area. And taking a look at Lululemon's September 4th quarter 2 earnings, we can see here for what they expect. For Lululemon's upcoming fiscal second quarter ending July 2025, the company projects their diluted earnings per share to be in the range of $2.85 to $2.90 and their net revenue of $2.535 billion to $2.56 billion. So these expectations were provided after their quarter 1 earnings, and analysts, according to Seeking Alpha and Nasdaq here, project a consensus EPS around $2.87 to $2.88 with revenues of $2.55 billion, so right in that range. As we can see here, that's what they expect coming out in this next quarter. What I want to look for on September 4th though, normally everybody wants to look at the earnings per share and revenue and then the guidance, but there's still a lot more important stuff with Lululemon we have to be looking at. And firstly, tariff and inflation impact. Personally, this isn't a huge concern to me because tariffs is a macroeconomic concern and it's not really a huge outlook in the future for Lululemon. It's more short term, but as we can see, a major concern for investors, 30% on goods from China and 10% from other countries with that tariff, and also inflation is hurting them a little bit. Taking a look here though, comparable sales and store traffic and the US market performance is the biggest deal I think for Lululemon. We have to differentiate the US market versus their international area, because with the US market, they've had a huge slowdown in this area where just last quarter they only grew 2%. Think about that, 2% year over year, and their comparable store sales were actually negative, meaning their same store sales were actually down from last year. So that's not good for a company like Lululemon. But we do want to see that in this quarter, we want to see the comparable sales and store traffic doing at least decent, because Lululemon has faced obviously investor skepticism due to slowing growth in the US. In quarter 1, comparable sales in the US were weighed down by weaker store traffic. So we want to see how this turns out with this recent quarter. And if it does good, I think we can see the stock rally. Also, inventory versus sales is a pretty big one for Lululemon. In the previous quarter, the inventory levels were up significantly year over year, which shows a decrease in demand for their products. Investors will be looking to see if this trend is continuing. Higher inventory combined with slower US sales is not looking good for Lululemon. We want to see lower inventory and high demand, but I think the biggest thing we need to look at, while I was saying US market performance is a big deal, I think the biggest deal for this company in the future will be international expansion, because this is the place that they're going to get the most juice squeezed out of, because this is where they're actually growing the company, and this is why they're actually still growing near double digits, which is because Lululemon is banking on international expansion to fuel future growth. Right now they're growing at 20+% in these other areas, and they're looking on updates for international markets in their first store in Italy. So they have a store in Italy, and China is their main growth path for the future. So that's what we really want to see for this upcoming earnings. And I want to talk about why international sales are so important for Lululemon. Taking a look here, international sales saw strong performance just this last quarter, double-digit increase in constant currency, such as a 22% jump in China mainland, 17% in the rest of the world. So the biggest thing with this company is going to be China. We want to see this growth continuing to grow. I would say at least 20%. If it's growing at least 20%, it's still looking good, but the comparable store sales also grew impressively in at international, though not as consistently across all reports. One reporting a note of 7% increase globally and another a 1% decline in the Americas. So if we really want this company to look good in the future, we need to see, I would say, at least 5% increase for the international and comparable store sales. And in reality, I would like to see this at least stagnant for in America. If it's at greater than 0% for America, that's going to be a really good sign for investors. But I do expect this to still, once again, be around that negative 1%. But if it somehow does go higher for the comparable store sales for the US, this would be really good. And as we can see, like we said, US market is really slowing with only 2% revenue increase, decline in comparable sales of 2% in the Americas. So that is looking very bad. That is the biggest problem with this company, is just the weakness in the Americas with what's happening. So I think the biggest thing for this company is their expansion into these other markets. If they can do well, you can still get a lot of good returns out of this company. But if they fail to expand as well as investors think, you're going to see negative returns, I believe. So the big thing you're going to be banking on if you buy this company will be international sales in the future. But taking a look at what to expect on September 4th earnings, these are the three big things I want to be looking at. I want to see America's sales 1 to 2% probably growth. If higher, I believe the stock will rally a lot because that is a big place. That is the majority of the revenue, and they still need to be growing at least in the majority of their revenue. Obviously, international growth will continue to grow rapidly, but we want to see that the America be the main place for their growth because that is their biggest revenue segment. But international growth will still obviously help this company. And number three, something people might not really be paying attention to is the buybacks for Lululemon, because taking a look here, these are the shares of Lululemon. We can see in 2021 we saw basically no decline, but ever since then we've seen huge buybacks, as we can see up to 4% last quarter. So with this earnings report coming up on September 4th, that's where I really want to see buybacks. If they keep buying back at, say, 4%, this shows really good confidence with the management in their future, with the stock and the company overall. So if we see a big red down once again with their shares, that means they have a lot of confidence in their company and you'll actually own more of Lululemon. Taking a look at my 7-step stock analysis, this gives us the financial health of Lululemon. And as we can see here, we actually get 7 out of the 7 key metrics as check marks. So this is good. The first two are the valuations, and this is a very low valuation. First, we just want it greater than 0, the price divided by the earnings, which means they are profitable. So that is good. Lululemon is obviously a profitable company. Now for the forward PE ratio, obviously we want this to be profitable, but I normally want this less than 30, meaning you're going to be paying $30 or less for $1 of earnings per share in the future. So this is based off their future earnings per share. Right now the market's trading in the mid-20s, so this is a very low valuation, and this is why I think people are very attracted to this company because of this low valuation. But I would like to add, I think the reason for this low valuation is increased uncertainty for the future of this company with their growth aspects, and also in the Americas they're really struggling. But in this recent earnings, if we can see somehow that this company in the US starts to do good, we could see the stock really rally. But taking a look at the revenue and earnings per share growth, this will show us that they're growing insanely fast over the past 5 years. But I would like to add, over the past, say, 1 or 2 years, it's only growing at 8 to 7%. Taking a look here, as we can see with the revenue, we can see it's really growing fast, but we can see it's starting to slow down just a little bit. Over the past 3 years, 17%, past 5 years, 23%. So this is pretty good for Lululemon, but it is obviously slowing down, especially over the last few years, and especially over the last year where this revenue growth is not even 10% right now. I think it's at about 9%. Still not bad growth, especially for this valuation, but it's decelerating, which isn't good. Also, shares outstanding decreasing at 2%, I really like. Taking a look here at the shares outstanding, we can see they really started to buy back recently over the past 3 years. They keep increasing those buybacks, so I really like that about Lululemon. Also, the debt to equity ratio at 40% is very good for Lululemon. Normally, I want to see it less than 50%, meaning there's less than half the amount of debt compared to the equity. So this looks good for Lululemon, but expected EPS growth rate, as we can see, look at the main difference between what they were doing in the past 5 years to now. It's a pretty big drop off, but at least it's still greater than 5%, what we'd like to see. And 8% still isn't bad. I think, especially for the valuation of a 13P ratio, it's still not bad, but I would be careful with this company because of the moat problems. As we see here, EPS right here is actually expected to grow 12.5%, but the net income 7%. So actually, that is kind of wrong, but do I think they're going to grow this much? Probably not. So I did decrease that because I don't think they're going to be growing 12.5% earnings per share. I don't know why they would be growing 20% earnings per share in the next 4 or 5 years with that. I don't know why that's the case, but I do think 8% is pretty fair because the net income is expected to grow 7%. That might be taking into account buybacks, but still, nonetheless, I think the biggest problem with this company, like I said, is in the Americas and also their international growth. We need to see that doing good. And me personally, my biggest concern with Lululemon isn't even about all that. It's mainly because of the moat problems, which what I mean with moat, if you don't know what Warren Buffett claimed a moat as, like a castle, you have a moat. The bigger the moat, the harder it is to get into a castle. So you want to see a big moat with this company, which means there's going to be less competitiveness and a company can't really be taken over. The problem with Lululemon, I think it's in a very competitive space. You have so many different companies that could potentially take over this company, and there's a lot taking into account with the market share. There's a lot of competitors. So that's the only big problem I see with Lululemon. And obviously the America's slow growth, but honestly, that's my biggest issue. I like buying companies that have a big moat. So with that being said, getting into my intrinsic value calculator here, this is using assumptions of the future for the next 5 years to get a fair value price. And to get a total annualized return, I think you can make today. So with that being said, for the bear case, like we saw, analysts do expect this company to grow at about 6.5 to 7% revenue growth for the next 5 years. So for the bear case, let's put a 4% revenue growth. I think that's pretty low, but just in case they somehow grow only 4%. Now for the base case, I'm going to do 6.5% because that's basically in line with analysts, and I think that's still pretty fair. Now for the bull case, let's actually do 9%. If somehow they really start to expand into China and all these other international markets, I think they could potentially get 9%, but it's very unlikely. But once again, the bear case of 4% I think is also very unlikely. Now for the future profit margin, taking a look at the past of the future profit margin, we can see it's been at around 17, 16% as of late. It's increased from about 14 to 17%, so it's in that range. So with the future profit margin bear case, let's say competition really eats at this company and gets down to a 14% profit margin. That's pretty fair. Now for the base case, I'm actually going to put 16%. I know that's less than what it is now, but I think if they're really going to try to expand, they're going to have to be spending a lot more. And also, I think the competition is just really high in this industry. Now for the bull case, let's put 18%. Now for the future PE ratio, we saw this company's trading at about a 13 PE ratio. Growing 4%, that's a very slow growth rate. So I think a fair PE ratio for a company growing that slow would be about 12. Now for a company growing at about 6.5%, I'll give it a 16 PE ratio and bull case a 20 PE ratio. Now for the shares outstanding, they're buying back at about 1 to 2%. So I think bear case, we could do negative 0.5%, so decreasing at 0.5% each year. Base case, let's do negative 1.5%. And then for the bull case, say they buy back at 2.5%. Keep in mind, they bought back at nearly 4% just this last quarter, year over year. So this could definitely be achievable. With that being said, for the bear case, I get a negative 0.6% return. Base case, I get almost a 12% return. Bull case, almost 24%. So right now, I think Lululemon is at a very attractive valuation. However, I'm just too worried about the moat problems with this company. I think they're just in a big struggle because of the amount of competition in this space, and also the problem within the Americas, and banking on only international expansion is slightly a problem to me. I would like to see them still growing in the Americas at a decent rate, but nonetheless, I think it's still at a decent valuation. But personally, I'm just not really interested in Lululemon because of those factors, unless it got to an insane valuation, which I don't think it's at that insane of a valuation to where I would have to buy this company. I do think it's slightly undervalued, but I try like to buy companies that are compounding machines that are growing very fast and also have huge moats. And me personally, I think Lululemon isn't really that type of company, so I'm staying away for right now. Unless it got under, say, $150, then I'd be interested, but right now I'm staying away. So thank you guys for watching this video on Lululemon. Please subscribe, hit the like button, comment down below, and thank you guys for watching. See ya.